Welcome back to Alpha Recap. Thanks for joining us after the close. We're unpacking May 19th sector landscape, and as always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, great to be here. Lots to get through. AI headlines, renewables deals, crypto drama, bank cuts, and a giant health system loss. Ready?
Absolutely. Let's kick off with the big picture. Markets closed with a pretty bifurcated profile. Pockets of strength around technology, utilities, and materials, while crypto, parts of finance, and healthcare were under pressure.
Yeah, that tracks. It felt late cycle, concentrated winners, lots of idiosyncratic pain elsewhere. I mean, when you step back and look at this, themes were really driving flows.
So, what really stands out here is the AI and renewables-led momentum. Google refreshed Gemini and pushed more on smart glasses, and that spillover helped software, cloud, and developer tooling headlines all day.
Right, and the M&A chatter around AI added fuel too. When platforms upgrade, developers get busy, and cloud consumption tends to follow. At least that's what analysts noted after the event.
Exactly. On the renewables side, there was a headline that grabbed attention. Enbridge announced a contract for a 365-megawatt solar plus storage project supporting Meta. That's a tangible example of big corporate offtake for storage.
Huge deal. Long-term contracts like that improve visibility for project owners and highlight the value of batteries and grid integration. Those are the kinds of contracts that change cash flow profiles.
And materials and mining weren't quiet either. We saw operational wins. Thor Explorations reported a big jump in first quarter net income, and Bald Hill Lithium restarted production. Those moves matter for battery supply chains.
Restarts and better junior results can tighten supply expectations. That feeds directly into EV battery narratives, so it's not just a mining story. It links back to tech and autos.
But there was a flip side. Crypto took a hit. Bitcoin slipped below $77,000 amid ETF outflows and liquidation pressure. And there was an on-chain exploit of about $76 million that made headlines.
Right. Those security incidents and big flows keep institutional adoption tentative. They're reminders that even with ETF structures, crypto remains flow-sensitive and vulnerable to operational risk.
Short reaction. Big move. On the financial side, we saw restructuring headlines. Standard Chartered announced about a 15% reduction in back-office roles tied to AI and efficiency drives. And analysts pointed out execution and regulatory risks for banks.
Yeah, cost cuts tied to AI are a story of efficiency and disruption. But they also create near-term noise in loan origination and fee businesses. Regulatory scrutiny only amplifies that execution risk.
Healthcare had a rough headline, too. Common Spirit posted about a $3.4 billion quarterly loss. That kind of operating hit raises real questions about reimbursement pressures and consolidation.
That number really stood out. When a major system reports that level of loss, it affects access to capital and can compress multiples for regional operators.
Not what anyone expected.
Let's break this down sector by sector. Quick hits on outperformers first. Technology led on headlines and momentum. Google I/O product refreshes, more AI M&A, cloud and developer tools strength.
Analysts note that platform upgrades usually translate into more developer activity and cloud consumption down the road. So, product news can be a forward indicator of compute and software demand.
Utilities were also in the winner's pile because of renewables and storage project activity. That Enbridge 365-megawatt contract supporting Meta was the poster child for today.
Right. And the other thing is, long-term contracts mean more durable cash flows for project owners and better visibility for regulated assets. That changes valuation dynamics compared with merchant exposure.
Materials and mining rounded out the outperformers. Thor's improved quarter and Bald Hill restart are concrete operational facts, not just promises. Those moves can tighten critical minerals supply.
And that supply-side pressure matters for batteries. Less spare capacity can influence pricing and CapEx decisions months from now.
Now the underperformers. Crypto. We already covered Bitcoin and the exploit. Finance, with cost cuts and regulatory clouds. and healthcare with the common spirit loss and ongoing legal fights.
Crypto's volatility was driven by ETF flows and concentrated liquidations. Data suggests that flows into and out of ETFs still have outsized short-term price impact, even as institutional frameworks evolve.
And security incidents, a $76 million exploit, add another layer. Analysts said it increases urgency around custody and audits, which benefits regulated custodians over permissionless protocols.
We should hit a few of the mixed or stable sectors quickly. Consumer and retail had mixed signals. TikTok Shop reported about 66% growth in U.S. small business sales for 2025, while traditional retailers faced cost and governance moves.
TikTok's number was eye-popping. Rapid digital commerce growth is real, but unit economics and margins still matter for broader retail profitability.
Energy was nuanced. Europe's second energy squeeze and LNG regulatory uncertainty were counterbalanced by distributed solar and storage innovation. Geopolitics around Hormuz kept oil and jet fuel supply risk on the table.
Real estate showed selective deal flow. A 796-unit Seattle build, about $81 million for a Southern California industrial buy, and about 1.4 million square feet office campus sale and financing.
Industrial capex moves were notable too. Toyota's about $2 billion plant in Texas and Alcoa's about $65 million recycled smelting investment signal ongoing capex, even as producer prices and supplier stress linger.
Communications and media had content momentum and infrastructure spends. Festival deals, a Tom Brady premiere, and dark fiber investments, which are multi-year earnings drivers, but variable in near-term monetization.
Time for cross-sector themes. 5 big correlations we saw tying these moves together.
First major theme: AI acted as a demand multiplier. Google's product cycle and broader AI M&A pushed tech strength, which then linked to semiconductors, industrial automation, and even crypto miners in terms of compute demand.
Second, renewables plus storage tied utilities, energy, and materials together. That Enbridge contract and lithium restarts showed how the value chain intersects. Storage adds revenue streams to renewables and boosts demand for battery metals.
Third theme: regulatory and legal risk stayed front and center. Banking reviews, healthcare lawsuits, state cannabis vetoes, these kept uncertainty high and created valuation dispersion across sectors.
Fourth, security and operational risk kept crypto and some fintech narratives volatile. The exploit and ETF flow swings made that clear. Institutional adoption is still very much conditional on custody and security improvements.
Fifth, deal activity was selective and yield-driven. Buyers chased contracted cash flows in utilities and logistics, while mortgage rates and cap rate repricing limited broad recovery in residential and office.
Okay, quick hits on the most consequential single moves. Google's I.O. refresh, that Enbridge contract, Thor's quarter, Bitcoin's dip under $77,000, the $76 million crypto exploit, Common Spirit's loss, and Standard Chartered's 15% back-office reduction.
Each of those headlines had a headline plus analysis angle. For example, Google's updates are about future cloud consumption. The Enbridge deal validates contracted renewables economics. Thor's results hint at tighter supply. And Common Spirit's loss raises capital questions.
So, what should listeners watch next? We pulled together several actionable, informational points. Not personalized advice, just data-driven areas to monitor.
First, track AI adoption metrics beyond product announcements. Cloud revenue growth, semiconductor lead times, vendor guidance, and developer engagement are the real evidence of demand.
Second, watch storage pipelines and contract details. Contract length, counterparty credit, and the value stack for batteries, capacity, arbitrage, and ancillary services.
Third, treat critical minerals updates as forward indicators for EV and battery markets. Restart timelines, approvals, and reported grades matter for supply assumptions.
Fourth, factor regulatory calendars into valuations, especially for finance, healthcare, and cannabis. Policy moves can re-rate sectors quickly.
Fifth, for crypto, Flows and security incidents were primary drivers of short-term volatility. Watch ETF flows, custody announcements, and on-chain metrics closely.
Sixth, real estate and industrial deal flow is selective. Differentiate by cash flow quality and financing terms. Occupancy and CapEx commitments matter.
Seventh, watch earnings and guidance for margin leverage versus input inflation. The next several earnings cycles will show who can pass through costs and who can't.
Short reaction.
That's a lot to unpack.
Risks to monitor. Geopolitical energy shocks around Hormuz and LNG rules. A regulatory wave hitting financial services and crypto. Security incidents that slow enterprise AI rollouts. And faster-than-expected interest rate repricing that could re-rate long-duration assets.
Analysts noted that any of those could widen the market's current narrow leadership or trigger sharp rotations, so those are high-impact watch items.
Final takeaways. May 19th reinforced a bifurcated market. Thematic winners clustered in AI, renewables, and critical minerals, while legacy risks in regulation, security, and large operating losses kept other sectors under pressure.
Active selection and attention to contract quality and balance sheet resilience were the practical themes. Data suggest investors will need to be selective as markets digest policy moves and the next earnings cycle.
Quick reminder, this is informational only. Analysts note trends and risks based on public headlines and company disclosures. This is not personalized investment advice or a recommendation to buy, sell, or hold any security.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Catch you next time on Alpha Recap. Good night, everyone.